guys, thank you so much for joining me. Unfortunately, we only have 40 minutes and we have so much to cover, but I do want to just do a super quick round of intros. So maybe starting from the back there, Travis, if you want to just give us a quick intro.
Travis Kling, run a liquid-focused crypto fund called Ikigai Asset Management. Been doing it for a few years now, and I was in traditional hedge fund investing before that.
David Greider, Head of Research at Grayscale Investments, the largest digital currency asset manager.
Matt Hougan, I'm the CIO at Bitwise. We're the largest crypto index fund manager. And before Bitwise, I spent 12 years in the ETF industry.
Good morning, Peter Doyle, co-founder of a company called Kinetics, traditional asset managers. Got into cryptocurrency in 2015.
Excellent. That was amazing, guys. I want to get right into it here. And actually, I'm going to pick on Travis to kick us off here, who's an alumnus of this exact same panel in 2019 when we did this. And I was talking to Travis before this about, hey, isn't it funny where we were in 2019? And Travis starts talking to him exactly what was going on in the market at this conference in 2019. So to set the stage for all of you here, we're in the midst of a bull run right now. We did see a 50% pullback happen a couple of months ago. It looks like things are recovering. The two primary narratives that kind of came out of that pullback were China and ESG. So I'd love to just start it off with where do you think we are in the market, and maybe if we could touch on those two narratives and where that's kind of at.
Yeah. Just by a quick show of hands, raise your hand if you were here at DAS markets in November of 2019. Yeah. So BTC was trading 8,500 bucks. ETH was trading 170 bucks. So can we just give a round of applause for how far we've come here? Yeah. You know, pretty weird thing to have happen at a weird point in the cycle, to the extent that everybody still thinks we're doing the 4-year cycle things around the Bitcoin halving. And, you know, I don't know how many people had Elon Musk is going to buy $1.5 billion worth of Bitcoin on balance sheet on their bingo card for 2021. But if you had that, you definitely didn't have, he's going to do a complete, about face and bring up how bad Bitcoin mining is for the environment. And then to have, China come directly over the top of that with the largest, most intense sovereign level attack in Bitcoin's history, completely unprecedented to the degree that they did that. And then for us to have been able to cover the amount of ground that we have with the B-Word conference, Jack Dorsey and Elon Musk and Cathie Wood getting up there, and Elon kind of having his opportunity to walk back some of the things that he said and make amends to all of the Bitcoiners. And China, I write this like monthly update letter, so I keep track of all these things. I put together a timeline of China negative events, and in the month of June, China had 26 discrete negative actions in the 30 days of June alone. Like, they just pretty close to kitchen sinked it. And then as soon as they stepped back for a second, price immediately went up 50%, immediately. And we've at this point, I think, covered a good amount of ground on helping people understand the ESG thing. Part of it was a narrative problem in terms of telling the story, and part of it was like the actuality of the thing. We're getting better on the narrative, and hash rate got cut in half, and the energy mix of hash rate changed a lot. And so, I think that sets us up for where we are right now. And I know we're going to talk a lot more about, Bitcoin versus everything else right now. But I think that if I was going to point to like a dominant market feature like today in September of 2021, it's that I've been doing this for 4 years now, and I've never seen Bitcoin more hated on a relative basis.
Yeah, I'm curious what the rest of you think there. It's something I've experienced as well. Maybe I'll rephrase the question a little bit, like history rarely repeats, but it often rhymes. And for folks who've been in this industry now for a couple of cycles, everyone's kind of a slave to their own experience, and you're starting to think, it heated up like this last time, maybe we don't have much longer to go. What in all of your experiences maybe feels a little bit different this cycle, inside this bull run, as compared to previous bull runs?
Sure, I'll take that one. I think the first thing we can probably all agree on is it's a fun time to be an investor, and it's a fun time to be an investor in crypto. And I think that, to answer the question directly, the thing that's most different this cycle is that use cases have really materialized. Things actually work. The technology is there. You're seeing a lot of usage and adoption and fees. It's not so much proof of concept stage, right? DeFi applications exist, assets are in them, and I think there's a lot of fundamental value that's actually being generated from that perspective. But maybe if I could just spend 1 minute and back up and just give folks a little perspective how we think about crypto and the markets overall. We view crypto as really this emerging market digital economy, these cloud economies that are really forming, right? And that starts with money with Bitcoin, and that's gone to cloud applications with other things, and digital businesses on top with these other businesses. And we're now moving to this new social level with what's happening with other assets like NFTs and some of the gaming metaverse things. And I think that that's where you're seeing these different waves of technology build to different fabrics of that digital economy. And just like any emerging market digital economy, what we've seen in the past with volatility in these bull bear cycles, I think really is just a reflection of the broader market environment that we see with boom and bust cycles in traditional market economies, right? So as you have actions like Fed policy, you have actions like monetary policy, financial market shocks that are either benefitive to the broader emerging markets, risk on assets, debt, stock market. I think that that's positive for crypto. And then some of the shocks we've seen, because it's been such a small economy, has made crypto very susceptible to some of the sharp volatility that we've seen in the past. And I think that that's the way that I would actually probably frame thinking about investing in this asset class in this market. And obviously we're much bigger today. It's a much healthier economy, and I think that that's good for the future of crypto overall.
Mike, I would just add, I think there are four things that are really different from the last time you were on stage, and they're all 0 to 1 things. The 0 to 1 things that I've seen change that make this cycle different than other ones. We had Paul Tudor Jones come into the market very publicly. He wasn't the first hedge fund, but he was the first hedge fund to do it publicly. That was a 0 to 1 moment, and it allowed hundreds of hedge funds to come into the market. We had Michael Saylor put Bitcoin on its balance sheet. That was a 0 to 1 moment. And now hundreds of corporations are lining up to do the same thing. Now we've had El Salvador come into the market as legal tender. That's a 0 to 1 moment. And now I think we'll have dozens and hundreds of countries come in. And the biggest 0 to 1 moment is, I bet in 2019 we were still having discussions about Bitcoin going to zero, about the whole thing disappearing. And I haven't had that discussion in the last 18 months. It's now the genie is out of the bottle and it's not going back in. And there's a broad understanding among professional investors that they can't just ignore it anymore. They have to have an opinion. It may be 1, it may be 10, it may be 100, but it's no longer 0. And I think that's a fundamental shift that may disrupt the 4-year market cycle that we've had in the past.
I'll add one more 0 to 1. Central banks around the world have radicalized people. Their money printing is out of control. I think people who are paying attention, seeing that they're being debased out of their wealth, are looking for an alternative. And I think that's one of the biggest things. I wouldn't describe myself as a radical, but I had my own Michael Saylor moment back in 2020. And I'm saying these people really want to debase us and tax us out of our wealth, and we need to protect ourselves against that.
Yeah. I would say on the subject of central banking, monetary policy in general, there is this now widespread, pretty well accepted idea that currency is being debased, but also we're in this era of ultra easy monetary accommodation where you're starting to see weird stuff in markets crop up. And it's not just crypto, right? I mean, we all just watch meme stocks. GameStop did a 50x or whatever it is, and now all these regulatory agencies are looking at it. So I guess when you zoom out for a second, you look at the macro environment and kind of lay that over this bull run, we're starting to see some weird stuff in crypto as well right now. So how much do you look at the overall liquidity conditions in traditional markets, monetary easing? How much does that impact your view of what's going on in crypto?
I'll take a quick stab. It impacts it significantly for me in one very simple way, which is I don't know how it's all going to turn out. I think anyone giving a clear macro view with 100% confidence is wrong. Could be inflation, there are signs of deflation. What I know is that the tail risks of monetary outcomes have widened. And if the tail risk of monetary outcomes have widened, the value of insurance has increased. And the insurance people are turning to is crypto. And I think that process of the tail risk of monetary outcomes widening is going to continue. And as a result, the value of insurance is going to continue to increase. And we're going to see more investors put crypto on their balance sheets and their portfolios, just as a way of hedging these extraordinary potential outcomes in a world where 40% of all dollars have been created since 2020. That's a pretty remarkable statistic, considering the US has been a country for 250 years. So when tail risk widens, you need insurance, and crypto is the most efficient insurance against that macro risk.
I agree 100% with that. You know, and back to the ESG component, you know, in my opinion, China probably made the strategic mistake of a century in kicking that out, because I think the mining capability is going to flood elsewhere. And literally, as we speak right now, there's a California gold rush going on in the western part of Texas, and they're trying to basically use that flared gas that's going into the air as methane, and it's actually going to improve the environment, and it's going to make money more sound and more better. So more better, interesting. Again, I think what it really is, it is this kind of this unique asymmetric return characteristic that you have by owning this asset class, and I think more and more people are going to embrace that.
The one thing I'd probably add to that, I mean, I think the connection to, you know, Bitcoin's the hardest money in human history, and so the connection to, you know, as an insurance policy against monetary and fiscal policy responsibility at this point is pretty clear cut. But I think another thing you're seeing is that a lot of liquidity and extremely loose monetary policy is leading to speculation around innovation to a degree and with some distortions, you know, that we haven't seen previously. And you know, if the Fed had not done $3 trillion of QE in 6 weeks last year, like, what would the aggregate market cap of crypto be? I don't know, but it's definitely lower than it is right now. And people, I think, are stepping outside of just Bitcoin and with its moniker of digital gold. And I think they're looking at layer one smart contract platforms and thinking of that as big tech. And you know, if you look at the overall, you know, sort of usage of smart contracts in the real world, it's still quite small relative to the aggregate market cap. But because of the distortions you're seeing from monetary policy, I think people's willingness to speculate on what this stuff might be one day is just you know, significantly larger than it would be otherwise. And the amazing thing about that is that the speculation can drag the technology up the you know, through the bootstrapping phase and into fruition. So during a period of time when there's low usage utility, you have people that are speculating and receiving financial utility because, you know, if you hit Solana, then bingo, right?
Yeah, absolutely. I totally wish I had. So I guess my question to you guys as asset managers, money managers in this space, it's tough, right? Because I think we all see the utility in things like NFTs, right? Does that mean the valuation is technically correct right now? I don't know. But you all are kind of manufacturers of ideas. You have to wrap investment products around these ideas. So when you're kind of assessing something like NFTs, something like DeFi, how do you make the decision this idea is ready for me to invest in as an asset manager? How do I know that the people that are trusting me with their money aren't going to basically lose everything?
Yeah, I think the first and foremost place that it starts is thinking about our clients. Obviously, we have to really, you know, work backwards from that and say, kind of, where is the market mature enough and ready enough to be safe enough for folks to invest in, and there's still strong returns, right? And I think DeFi is a great point that you touched on. I think if we look at a lot of the large DeFi protocols and a lot of these assets, right, there's been a lot of battle testing that's happened already with definitely most of the blue chip ones, right? And it's kind of like Bitcoin and Ethereum, the time they've been around is kind of the time that they've really proven themselves. And you know, I think that if I just step back and I kind of also phrase it back to the prior question, you know, obviously monetary policy matters a lot, and that's going to impact the broader crypto economy. But there's a lot of strong secular growth tailwinds that folks should be thinking about investing in these emerging market digital economies, because it's really like the next wave of the cloud and the next wave of fintech in many ways, of course. And what you've seen is, you know, a lot of actual fundamental value in terms of cash flows flowing into a lot of these products, right? So if you look at some of the DeFi names, many of them are trading at very reasonable relative to cloud name type price to sale multiples, for example, you know, 10, 20 maybe times, right? And that's not unheard of relative to the cloud index. So I think if we're thinking about, you know, back to the broader environment, you know, obviously the big tech, the FANGs, those names, right, benefited by rates and policy. I think there's a secular trend here that both benefits them and also the macro environment as well.
Yeah, Matt, actually, I'd want to pick on you here because you have a great DeFi product. So I'd be curious, like, what was the thought process that went into that? Anything you can say about interest from investors? What sort of investors are interested in it? Be really welcome.
Sure. Yeah, we launched the first DeFi index fund, and the response from investors was amazing. As framing, we launched the first crypto index fund, the Bitwise 10, and it took about 3 years to get to 100 million. Our DeFi fund got there in about 6 weeks. Wow. Which shows you, and the reason it got there so quickly is that for institutional investors, it's way easier to grok DeFi than it is to grok Bitcoin. The first words you learn when you join the traditional finances, this time is different, are the most expensive words in the English language. And fairy internet unicorn money falling from the sky and being worth $1 trillion is different. And so people are skeptical of Bitcoin. But innovative technology disrupting traditional financial markets or disrupting old industries is the story of investing of our generation. And DeFi is exactly that. It's doing things more efficient, faster, et cetera. In terms of how we decide if it's ready for investment, you have to make sure you can avoid all the binary risks that could send you to zero. So you have to make sure you can custody these assets at an institutional level, that they have actual and not fictional liquidity, that they've gone through screens, that they're not subject to regulatory crushing. And so we run index funds. It seems very easy, but we actually screen assets extensively, and we've removed assets from our index because of regulatory developments that we think put them at binary risks. What we don't do, and what I think is really risky in crypto, is underwriting the price of these assets, saying DeFi is too big, too small. Once you can securely invest in these, it's hard to predict where it's going to go, and we just provide access vehicles.
So we just accept the fact early on that it might go to zero. And I used to, when I was younger, have to travel around trying to raise assets, and it was always a very difficult concept because we were very concentrated portfolio managers. And I would say, well, if you like what we do, don't give us 4%, give us 1%. And somehow most investment managers can't get their heads around that. So when we first put clients into it, we said, this may go to zero. We can control our risk by the sizing of that position. And we put either 1%, 2%, whatever, at most 2% at the time. As we studied it further, I think people are fascinated with the development of DeFi and upending traditional capital markets. But the real 0 to 1 moment, in my opinion, still, is that Bitcoin is the best form of money that the world has ever seen and is likely to continue to be so. So that has not changed from the minute I heard it. I literally knew I was going to invest in Bitcoin within 90 seconds of hearing the story and understanding it. And that opinion hasn't changed in the 6+ years that I've been involved. And I've gone further into it as I see what's developing around the world and the craziness that I see on a daily basis.
Yeah.
I'll try and take a hack at the NFT thing. Couple comments. I mean, a big part of it's wealth effect. I mean, people got big rich with ETH, right? And started doing stuff with it. And the version 1 of the collectibles, the CryptoPunks, those sorts of things, if you are structurally very long ETH and you're trying to figure out a way to generate a lot of hype for Ethereum while, DeFi maybe is dealing with project dilution issues, there's like too many things to look at, or there's regulatory uncertainty, for example. If you can spin up another narrative to go alongside DeFi in the form of NFTs, well then, if you own ETH, it's kind of like owning Facebook and getting Instagram and WhatsApp along with it. And you get to own a layer of innovation and the optionality that you get there. And people will just find that much more attractive as an investment case. So, if I had a big pile of ETH, I'd spin it up to get NFTs going, it makes sense. And then the other thing I'll say is the metaverse stuff, the existing more digitally, I was not a technology investor and not much of a technology kind of guy before I got into crypto. And now doing this for a while, you spend a lot of time thinking about like what the world's gonna be like 10 years, 20 years, further along, and that's one of the nice things about doing this job. And I don't know how many people think that, or probably most people have seen Ready Player One. I don't know how many people think that we're like generally heading in that direction, but I will say my conviction that we're generally heading in that direction has definitely grown over the last couple of years. And you know, hopefully we get the more like utopian version and not the dystopian version of that, but like, you know, I'm not holding my breath. But if you think that you're heading in that direction where people are spending more and more time in a digital world, then like you're gonna start somewhere and it's gonna be real awkward, right? And it's gonna be these things like putting the newspaper on the internet when the internet first, oh, this is what the internet's for. We're just gonna put like a hard copy of the newspaper on the internet, right? Well, here's you know, this CryptoPunk thing. But it is the beginning of something that like I think is highly unlikely to go away, and a trend that's probably gonna be just a major part of everybody's life, yeah.
Yeah, I'd add one thing on it. Who in here thinks $3 million for a digital rock is a crazy idea? Anybody? It's okay. You can say it, it's safe. Okay, who thinks digital property rights is a crazy idea? Digital property rights is like a massive idea. If you think about what area of the market there are going to be multiple billion-dollar companies built in the next 10 years, boy, digital property rights look good. And NFTs, as goofy as $3 million digital rocks look, are just the first instantiation of digital property rights. And so while it's goofy and silly and whatever, we can laugh, long term, if you think about what trends to focus on over the next 10 years, thinking about what digital property rights can mean for the technology industry, for the financial industry, for other industries, is a mindscape worth a lot of money.
Yeah. One more thing I want to add too is like in terms of just capturing normal people's attention, like decentralized finance, like providing financial services through trust minimized ways, that relative to like crazy NFT game, like come on, like what are we, in terms of capturing normal people's attention, that's definitely just gonna like get people's ears perked up a lot more, yeah.
Yeah. So maybe knitting together some of these things that we're talking about, the metaverse, DeFi, and kind of like bringing that back to crypto and just how this industry tends to progress in cycles, right? So Bitcoin for the entirety of crypto was basically the only thing, and now it's kind of the bellwether. And the majority, crypto so far historically has kind of gone in these 4-year cycles. For those of you who aren't familiar, it tends to be around a supply-driven event called the halvening, and that has really driven the rest of the crypto market. I think if you look at this past bull run, my personal opinion is you look at it, I mean, ETH was a huge driver, and a lot of the things that are built on top of ETH. So I've got 2 questions for you, just in terms of cycles. One, do you see that 4-year cycle continuing to repeat with Bitcoin as the driver? And if not, what are the new drivers of the market is going to be? What is this new type of cycle that we might be entering? What does that look like?
Yeah, maybe I'll start. I think that it's actually maybe somewhat of a coincidence that some of the 4-year cycles around Bitcoin's halving and its supply, meaning the reduction of the new supply issuance rate, has kind of coincided with some of the price volatility cycles. But I think the thing that people miss is actually they kind of also those cycles really have coincided with the broader macro risk-on environment, right? So when you had the Fed taper in 2013, right, towards the end of that, I think that was also like the top, right? And other things occurred around 2017. You had kind of the top rate hike, the 5th rate hike that occurred there. So I think that the broader macro economy, as these things are bigger and the digital assets are more well integrated in flows, and that's going to be kind of key. And I think that if we take it to the original part of the question, which is like what parts of the innovation kind of stick and gain traction at what different points, I think there's been this like, really interesting thing that like each cycle, there's like something that's that works that kind of got tried in the prior cycle. Like, for a long time there was people were trying to build like smart contract platforms like on top of Bitcoin and like colored coins and all of these things, and kind of the next wave, like it actually worked with Ethereum. And then this next wave, they got kind of this new scalability, group that kind of didn't work yet or exist in that Ethereum wave, but it's now kind of there with, Solanas and the Avalanches of the world, right? And the same thing kind of happened with DeFi as well, where a lot of different DeFi applications kind of existed and were like tested and, weren't exactly there yet in the 2017-18 wave, but in this wave, like it's stuck and it's like gained this fundamental traction. And I think you're seeing that play out with, NFTs and the metaverse. And I think that I do agree, there is a lot of actual fundamental value here. when it comes to a cultural perspective to the crypto community, right? And I think that many of these things will be here to stay. There will be many, just like in the traditional realm, that don't have a ton of value capture. But I think, again, if that same type of dynamic plays out, I think that maybe even the next biggest opportunity for those types of proof of concept spaces in the market could actually really play out big, potentially in the future.
Yeah. I mean, one thing that I think if you haven't been operating in this industry, just to build on exactly what you just said there, is that a lot of these narratives that are taking off, like NFTs in 2017, people were talking about NFTs in 2017. And DeFi was probably the thing that really worked this cycle, but that was built on kind of the innovation of ICOs. And we think of ICOs, these super frothy, fraudulent things, but that paved the way for what the next cycle ultimately ends up getting built on. So one question, when we talk about macro as well, and then I kind of want to actually get in on some predictions, is when people think about connecting Bitcoin or crypto in the macro, they say Bitcoin, interest rates, inflation hedge, that's the connection. I'm curious, as other parts of this market become more and more important, I think there are other things to pay attention to. When companies get deplatformed, right, or shut out from the banking system. Honestly, I'm not sure how many folks paid attention to OnlyFans. Not sure how many people in this room are users of OnlyFans. No one needs to admit anything. But they have 140 million users. And they were essentially shut off or threatened to get shut off from the banking system. To me, that's an important signpost because other companies look at that and say, I could get my banking access shut off. And when meme stocks thing was happening, everyone was like, wait, this is how market structure works? Are you kidding me? This feels so unfair. And it's really opaque. So I'm curious, do you see those as being macro drivers of growth going forward? Are those important signposts to be watching? What's your opinion on that frame of view?
So I do actually. Open source software, and you can see the protocol and understand the protocol and audit where the coins are is a big, big change in history. And that's the most important driver from where I stand. So the vast majority of the coins that are out there don't have that characteristic. They were pre-mined. They're really controlled by a handful of people. They can shut you off. Those types of coins are basically running back into this system that we currently have. And if you want to move away from that, the mining aspect of it, the auditability of the coins themselves, the limited supply are really the fundamental things. So I'm going to throw a prediction out there. My prediction that the mining industry, crypto mining industry, will ultimately be the biggest industry in the world by far. By far.
Wow.
Wow. That's a big comment. I agree. There you go. The mining fans. He owns Riot. I agree that those are important signposts. I also think the industry is just more complex as the sort of giant risk factors that could destroy crypto disappear and the use cases appear. The drivers are going to be more complex. We haven't used the word regulation on here, but regulation may actually impact crypto in the coming years. I'm not sure what you think. But I think it could be a major driver and just real world use cases. I mean, I think you're going to see crypto assets perform in a more heterogeneous fashion than they have in the past. As a simple example, people think of all crypto assets trading in lockstep, but something like Uniswap should trade more like Coinbase, which is only about 0.6 correlated to the broader crypto market. Why? Because it's doing effectively the same service, albeit in a more interesting way. So I think you're going to see more heterogeneous returns and more drivers of those returns than we've seen in the past.
The number one factor that I was looking at, just to kind of did a deep dive on a couple months ago that made me rethink, it was when I was trying to decide whether or not, did we really just end a cycle right now? In mid-July, are we really done here for 18 months or something like that? And one of the biggest factors that I came to was the depth and breadth and quality of the venture capital deals that were being done, the magnitude of the raises, how spread out they were across a lot of different business lines, and just really headline names that were getting involved, and traditional VC folks that were getting really, really involved, the growth equity guys that were getting really, really involved, the just individual names. Like it's like, you know, Paul Tudor Jones is just like doing VC checks now, right? And so are a bunch of these other guys, and so is Mass Mutual and New York Life and all kinds of institutions like that. And the raises are happening on enormous valuations, and the size of the raises themselves. FTX in July raised $900 million on an $18 billion valuation. As a $900 million Series B, I think that's one of the biggest Series Bs of anything ever in the history of fundraising. Yep. And the list of guys that were involved there, it was just like, you know, super blue chip. And so many of the VC funds are either sitting on a good amount of dry powder right now, or can probably make a few phone calls over the weekend and spin up a $500 million fund or whatever the size is. And you're looking at hundreds of crypto projects and companies that today have multiple years of runway without taking on another dollar of capital. And then you have an entire VC industry that's flush with cash behind them as well too. And when you start thinking about like how we could go into one of these deep bear markets again with that as the backdrop, I struggle to see exactly how that could happen.
There's one more piece too, which I think is overlooked, which is that these companies are already profitable and reinvesting their profits. We run an index that underlies an ETF called BITQ. It has pure play crypto companies. The average company is growing its revenues at 330% and has 38% profit margins. Wow. Usually, hyper-growth companies are losing money, and they're raising VC to fill that in. But this, because the traditional financial industry and other parts of the industry have been afraid to enter the crypto market, these companies have been able to build these enormous moats and create these enormous profitability. Many of the Series A and Series B companies are profitable as well. Yeah. And so you have not only that funding, but you have the ongoing funding that's being reinvested in growth, because traditional finance has been afraid to play in this market for so long. I think it's like a superpower of the crypto industry.
Yeah, and in the same way that the power of the 0 to 1 moment of Bitcoin's not going to zero, and just how big that is, in the same way, the potential for us to be moving away from a 4-year cycle thing, let's not downplay how big, that's a big deal. That is a big shift in how everybody thinks about the opportunity set of this asset class. And it's a little too early to say, I mean, in my opinion, I think the biggest driving factor is going to be tapering by the Fed, and then are they actually going to pretend like they're going to try and raise rates for a little while? And how long can they keep this charade of monetary tightening going on before everything just starts to break because it's a big rickety piece of shit that we've built in this global financial system, right? And that's fine, right? And I think a lot of us in this room know that. And we're all kind of watching to see, like, are you going to get 1 interest rate rise in there? Are you going to get 2 interest rates in there? Like, or are we just going to cut half, we're going to taper halfway to 0, and then everything's just going to start melting down, and Powell's just going to back off because there's no political willpower to kind of do that. And I think that's going to be the biggest driving factor for, you know, what any kind of bear market's going to look like for crypto.
I guess, you know, as we're closing down here, we're running a little low on time, but I do want to get your perspective for just like, everyone asks this question, right? Where are we in the cycle? And I will say, like, again, on the history doesn't repeat, but it does rhyme. The last time in 2017, you know, you saw like Steph Curry and Tom Brady and everything. Those are blue chip celebrities. But the last time we had like DJ Khaled and Floyd Mayweather, and that was the top. That was the top. So it's slightly more blue chip. But sometimes I do see that stuff and I kind of worry. And I know when you zoom out, right, this is all just going to be blips. But I'm curious, like, how much do you guys think about market cycles? Does it feel like we're in a later inning? What do you guys think?
So Gavin Andreessen was giving away, back in 2010, 5 Bitcoins on a Bitcoin faucet. And you can go to Fold and you can get Satoshis now instead of actual Bitcoins, and they're giving them away for free. And I sit there and I say, I wonder how many people are doing that. And I went on a website yesterday and I found 10 sites that are giving away Satoshis for free on a daily basis. And I started doing that. So in my opinion, use baseball analogy, the players have not even arrived at this stadium yet. And that's how early it is, even though we're a decade plus into this. It's so early. This is the way the world's going, whether you understand it or not, whether you believe it or not. So I think we're incredibly early.
Yeah, I think that obviously, Travis talked about the taper. That I can't say that won't have an impact on markets. I can't say that's priced in, and that wouldn't be a shake. But again, I do kind of agree. Like if we think back to the longer term, bigger picture, and how these things have, really are developing in terms of maturity. There's a reason that Andreessen was able to raise a $2 billion round of VC venture funding for investing in crypto, right? Relative to the size of the crypto markets, that's like very, very big. And you're seeing a lot of late stage and growth come in for some of the companies. And I think that that's probably really a sign that the industry is maturing. We're reaching a point where the economics of the business can actually start to fundamentally stand on themselves. And I think that I just want folks to probably continue to invest in crypto innovation and try to find the winners that maybe prevail either way through the cycles.
There's a relentless bid for crypto exposure from institutional investors right now, and until that stops, the cycle's not going to stop. I would add there are parts of the market that feel overhyped to me. NFTs right now feel a little bubbly to me, and there are parts that are overlooked. I would say that DeFi is being overlooked right now, and people only understand about 50% of the DeFi story. So I think the answer may be more complex than it was in the past, but generally speaking, the relentless bid from institutions is going to keep this market headed, generally speaking, up and to the right, although with bumps along the way.
I think I would just reiterate what I said a second ago, which like in the near term, I think tapering, can matter, and to the extent it gets pushed into Q1 because the labor markets, got a lot of weakness in it, then I think that can be a tailwind into year end for sure. Over the medium term, I think it's just how long can they pretend to tighten before they can't do that anymore, and maybe right around the time we get to the 2024 halvening, we've got more QE cranked up than we had in 2020, and they've found some excuse to do even more, and that's my base case that'll happen. And then over the decade plus timeline, maybe taking it back to the beginning of this, when we were sitting here in November of 2019, most of us were pretty convicted that all of this was going to work and be a pretty big deal. And there was a big portion of the outside world that wasn't paying any attention to that. And that's changed a lot since the last time we did this. And the directional bet, it looks obviously more certain now than it ever has. And exactly how that plays out, and the pace or the specific direction, you can have different views about, but the broad directional of this is just completely compelling and getting pretty hard to kind of put together a valid argument against. Yeah.
So I just wanted to touch on, so the debt ceiling needs to be changed, increased by probably October 15th. Federal, state, local government already accounts for about 50% of GDP in this country. They cannot afford to have that shut off. It would throw the economy into a tailspin. They're going to approve the debt ceiling, whether it's $8 billion, $10 billion, they're going to continue to spend. And that bodes well for financial assets, that bodes well for cryptocurrency.
Yeah. And one final, I guess, observation to end on, this doesn't come from me, this comes from a guy named Raoul Paul at Real Vision. If you look at just the growth rate that's undergoing in crypto and you compare it to the internet, if I were to say, what do you think the growth rate was in the 90s for the internet? 50%, 60%, I'll just tell you, it's 66%. In crypto, for the last 6 years, it's been north of 100% per year. And at some rate, that evens off, right? It plateaus just like it did for the internet. But there's a lot of uncertainty, and things can certainly go wrong, and you should always be careful. But the numbers start to get really, really big when you apply those numbers, and they compound over periods of time. So, all right, guys, I think we're wrapping up. That's about all the time we have. Thank you so much. I didn't call this out, but give Travis's socks a big round of applause, by the way. Okay, guys, thanks very much.
Thank you.
Thanks very much. Excellent. That was a lot of fun.